Hello, this is Dr. Janice Seto, and I'm the instructor for this course at the Canadian Pre-University Program at Taylor's College in Subang Jaya. And it's a beautiful day here in Malaysia. And what are we doing now? It's Chapter 2 in Financial Accounting. And what we're on now is we're doing the last, practice exercises that were optional with Mr. David's class and my class for the preparation for the test tomorrow. So let's see where we are right now. It's practice exercise 70, 71, 72, and 73. So let's see what we have here. We have, for practice exercise chapter 2, and it's number 70B, it's one in which we have analyzing transactions, and then we're going to journalize everything. So there are, for this company, it's Smith Real Estate, and it's the month of November from the 4th all the way to the 30th. We have to do something with this. Let's see what we have to do. And there we are. The requirements are, first of all, you classify each of the events from November the 4th to the 30th. Now, some of them are business related, but they don't have anything to do with Smith Real Estate. There are some business transactions for one of the shareholders, but really it has nothing to do with Smith Real Estate. Then the last category is C. These are business transactions to be recorded by Smith Real Estate Company. If you remember from Mr. David's Facebook posting, he said some of these transactions, like A and B, are what he calls fake. In other words, they don't have anything to do with the company. So the first thing we have to do is identify which ones have to do with the company and which ones don't. Secondly, we have to decide of the ones that are not fake, how do they affect the accounting equation? Remember, the accounting equation is A equals L plus E, assets equals liabilities plus equity. Then the third is we record these in a journal and include the explanation for each entry. Remember, I've shown you how to do this using Google Sheets, and you can also use Microsoft Excel, or you can use the pen and paper. I've given out handouts on blank general journal entries, and also the T accounts. So whatever works for you. But let's see first, what is this? We have now a situation where we've got, some of these are fake. So let's see which ones are fake and which ones are real. Let's see. All right, so November the 4th, let's see what it says here. November the 4th is John Smith, the major shareholder, received 108,000 pounds in cash from an inheritance. Well, I'm very happy for Mr. John Smith. That doesn't have anything to do with our business. So we can say, good on you, John, but nothing to do with Smith Real Estate. So that's what Mr. David would call a fake transaction. Okay, November the 5th, I deposited 59,000, it's not pounds, euros, cash in a new business account entitled Smith Real Estate. The business issued ordinary shares to Smith. Now, this definitely is a real transaction. It's nothing fake about it. So when you deposited the 59,000 euros into a cash account, that's an asset account. And then by issuing ordinary shares at the value of 59,000 euros, that means the equity has also increased in the equity account called share capital. Now let's look at C. The business paid 500 euros in cash for stationery for the new office. Now, stationery is envelopes and paper where they have letterhead which says Smith Real Estate. It's nice, professional looking. So that's supplies. So when you pay for that, for supplies, your supplies inventory has increased 500 euros. Your cash, of course, has gone down 500. Number 7. The business purchased office equipment. Oh, well, anytime you see something like that, when they're buying something, you know something's happened and it's affected the value of the business. So office equipment, that account, that asset account, has increased. Now, how much is the value increased by? Well, it looks like it's 20,500 euros, because they paid some of it in cash and they paid some of it in not cash, which means it's accounts payable, and they're going to pay it later on. So that's nice to know that. Okay, that's good. Now, what else do we have here? Let's see. The next transaction is on the 10th. Let's see. So what's happened here is he sold some shares of a DLD company, which he owned for several years, and received 74,000 euros from his stockbroker. That's nice for John Smith. It has nothing to do with Smith Real Estate, so that's another fake account. The 11th, he deposited the cash from that sale into his personal bank account. Oh, very nice. He didn't go to Macau or Vegas or Genting in order to spend the cash. He's decided to put it away. That's nice. Again, has nothing to do with Smith Real Estate. Number 12, representative of a large company telephoned Mr. Smith and told him the company's intention. They want to transfer 12,500 euros of business to him. That's nice, but that hasn't happened yet. So if it hasn't happened, it's not a transaction. Another fake. 18. Finished a real estate deal for a client and submitted his bill for services, 3,000 euros. He expects to collect from the client within 2 weeks. Well, now we know that this is definitely a transaction, and there's an accounts receivable due in to this company for the work that he did. And very nice. So, bit of service revenue, and they'll pay 2 weeks. Nice. On the 21st, the business paid half of its account payable to the equipment purchased on November the 7th. So November the 7th, they said, okay, so they charged to accounts payable 8,500 euros, and they said, and here on the 21st, they paid half of it. Well, then that's very good. So that's 4,250 euros. And that was from, I guess it's cash. So you credited cash, and you debited the accounts payable. The business paid office rent of 500 euros. Yes, so that sounds like a rent expense of 500, which is debited and taken out of cash, so credited cash 500. The business declared and paid a cash dividend of 1,700 euros. So cash dividend, and it was taken out of cash. So cash went down, that's credit, and then the dividends was 1,500. All right, that's nice. And now we have so we've analyzed all of the accounts, and now we're into number 3. Let's record the transactions of the business in its journal. We include an explanation for each entry. So we'll find that. Yes. So again, as you can see, we've identified the fake entries, and now let's go down, and well, this is what I talked about. Okay, so here we are. Cash, accounts receivable, supplies, office equipment, accounts payable, share capital, retained earnings, and let's see, service revenue, rent expense, dividend, everything's there. It balances. A equals L plus E. Now the journal explanations are very much right here, as I had mentioned. So I guess I should perhaps maybe I can slow this down a little bit. Let's see if there's a way in which I can capture all in one screen. Maybe not that. There we are. And that ends number 17. Or sorry, number 70. And now let's go on to number 71. Number 71, analyze and record transactions. And so what does that mean? It means we journalize each transaction. Oh, in this case, no explanations are required. So don't put any explanations. Then post them to the T accounts, and these are the T accounts they want you to post to. cash accounts payable, notes payable, and then decide how much cash does the business have and how much does it owe in total liabilities. So this is a Swenson auction, and auction usually works from a cash basis. So now let's just see what those answers are. I mean, you should pause the video, work it out, and then let's take a look at the answers. Well, here are the answers, and as you can see here, for number 71, again, no explanation necessary. So cash, started the business, $28,000, and $28,000 was the share capital, and then they had to pay rent out of cash, so cash was credited. Rent expense was debited, $2,000, and then using cash, some form of cash and notes payable. So they put down some money, they say they'd pay the rest later, and they purchased that much land. Bought supplies, but said we pay it later, so put on accounts payable. Later on, they paid off some of that accounts payable using cash. So cash was credited. And as you can see, then there's the others, and there we are. Let's take a look at those T accounts. So as you can see, a lot of cash actions transactions have taken place. So if you add that all on the debit side and all on the credit side, you find that there's a balance of $41,600 in the cash account. Accounts payable, after charging that much, they paid it off, some of it in cash. There was that much left over. And then here we are in the notes payable. And then the last part is, so the cash, they've got $41,600, and the total amount owed is here. You add the accounts payable balance and the notes payable balance. And now we are at number 72. Again, this is if you do this, you'll be very well prepared for the test. It takes us through from early. So here we are, another company, O'Shea Plumbing, which is starting its first month in operations. What do? They have some money invested, then they issued share capital. So it's the same thing, and then at the end they declared and paid out dividends. Again, record each transaction into a general journal. Make sure you have the date, and don't put any explanations. And so using the action dates as posting references to the T accounts, then prepare a trial balance. So it says how much, the fourth one is what kind of resources does the business have to work with, how much does Shea owe, and was January profitable? Let's take a peek. Here's the general journal, and as you can see, no explanation necessary. And here it is, the rest of the journal, because a lot of things happened in that month. They obviously made profit because there were dividends paid out. Let's take a look now at the T accounts. We don't have that many T accounts. Cash accounts receivable, supplies, equipment, land, accounts payable, share capital, service revenue, and dividends. How are we doing? Pretty well, I'd say. We only had a few expenses, salary and utilities, because plumbing, they're going to need to use electricity. And here we are, their trial balance. So after the first month of operations, they seem to be doing quite well. So here it is, the answer for number 72. 73 is also quite easy, because you post directly to the accounts, T accounts. You don't have to go through the general journal. And then after that, you do a trial balance. All right, so let's go. And say, I don't think there's any fake accounts or fake transactions here. So here we are, the T accounts. And as you can see, it's a music business. And here's the other T accounts. Salaries, advertising, rent, and utilities. And now, where's that trial balance? So here we are at the trial balance of this company. It's very nice that Silver Entertainment was able to basically make good profit. I mean, look at that. Of course, they had to spend lots of money in order to get their music equipment and their building, but still they were able to bring in money in service revenue. That's quite nice what you see there. So hopefully this place is on the road to being viable in the